Participation by head of household, race, and gender. The racial composition of stock market ownership shows households headed by whites are nearly 4 and 6 times as likely to directly own stocks than households headed by African Americans and Hispanics respectively. As of 2011, the national rate of direct participation was 19.6%. For white households, the participation rate was 24.5%. For African American households, it was 6.4%, and for Hispanic households, it was 4.3%. Indirect participation in the form of 401k ownership shows a similar pattern with a national participation rate of 42.1%, a rate of 46.4% for white households, 31.7% for black households, and 25.8% for Hispanic households. Households headed by married couples participate at rates above national averages, with 25.6% participating directly and 53.4% participating indirectly through a retirement account. 14.7% of households headed by men participated in the market directly, and 33.4% owned stock through a retirement account. 12.6% of female-headed households directly owned stock, and 28.7% owned stock indirectly. Determinants and possible explanations of stock market participation. In a 2002 paper, Annette Vissing-Jurgensen from the University of Chicago attempted to explain the disproportionate rates of participation along wealth and income groups as a function of fixed costs associated with investing. Her research concluded that a fixed cost of $200 per year is sufficient to explain why nearly half of all U.S. households do not participate in the market. Participation rates have been shown to strongly correlate with education levels, promoting the hypothesis that information and transaction costs of market participation are better absorbed by more educated households. Behavioral economics, Harrison Hung, Jeffrey Kubik, and Jeremy Stein suggest that sociability and participation rates of communities have a statistically significant impact on an individual's decision to participate in the market. Their research indicates that social individuals living in the states with higher than average participation rates are 5% more likely to participate than individuals that do not share those characteristics. This phenomenon also explained in cost of terms. Knowledge of market functioning diffuses through communities and consequently lowers transaction costs associated with investing. History. This concludes this video. Please continue to the next video.